Welcome back to Rekt Radio, the show that looks at a flat market and sees a titan taking a well-deserved nap before the next leg of its epic journey. I'm Summy, and folks, don't let the quiet fool you. Big things are brewing under the surface.
And I'm Cole, here to tell you that when a titan takes a nap, it's usually after it has laid waste to a village. This isn't a nap, Sonny. It's the eerie calm after a storm, and probably before a much bigger one.
You have such a flair for the dramatic, Cole. It's all about perspective. Take the corporate adoption story. It's moving into its next, more mature phase. We're seeing companies like Metaplanet in Japan not just buying Bitcoin, but making it a core long-term treasury strategy. They're planning to hold their Bitcoin for the long haul, at least until March 2026. This isn't a speculative punt, it's a strategic embrace.
Oh, a strategic embrace? Sonny, this is the same playbook we talked about before. A company sees its stock price and decides the best way to get attention is to start screaming Bitcoin from the rooftops. It's a narrative play. They're just following the MicroStrategy model, hoping to catch a ride on a hype train. What happens if the price goes down for a year? Is their long-term strategy going to hold up when their balance sheet is bleeding?
But that's precisely the point. They're not day trading it. By setting a long-term goal, they're signaling that they understand the fundamental value proposition. They are treating it as a true reserve asset, a hedge against the debasement of traditional currencies. This is how the world slowly shifts. It's not about quick profits. It's about long-term value preservation. They're building a fortress, brick by brick.
It's a fortress built on a volcano. They are tying the fate of their company to the most volatile asset class on the planet. Calling it a long-term strategy is just a fancy way of saying we're closing our eyes and hoping for the best. Real strategy involves managing risk, not taking on more of it because it's fashionable. It's a sign of the times, all right, a time of deep speculation, not sound corporate governance.
It's the pioneers who get the arrows, Cole. While you're worried about corporate governance, the smart money is getting positioned for what's next. Let's talk about Ethereum, the world computer. The options market is absolutely buzzing. Traders are making big, bold bets that the price of Ether could hit $6,000 by Christmas.
Of course they are. This is what happens in a casino. People make wild, long-shot bets hoping for a jackpot. You're citing the behavior of degenerate gamblers as a bullish signal. The fact that someone is willing to buy a lottery ticket that pays out if ETH hits 6K doesn't mean it's going to happen. It just means there's a lot of hopium in the system. They're repricing tail risk, which is a fancy way of saying they're betting on a miracle.
Let me jump in here, because it's more than just a few lottery tickets. The odds for a $6,000 ETH have surged. This indicates a significant shift in market sentiment. This is the derivatives market, the so-called smart money, placing calculated wagers based on their analysis of future events. They're looking at the potential for an Ether ETF, the deflationary supply, the network effects, and they're saying there's a non-trivial chance of a massive upward repricing. They are betting on the future.
They are betting on a future that might not exist. The options market is a place for hedging and speculation, not a crystal ball. For every trader buying a call option, there's a market maker on the other side selling it to them, probably laughing all the way to the bank. A surge in demand for out-of-the-money calls is often a contrarian indicator. It's a sign of peak euphoria, the moment right before the rug gets pulled. It's when the retail get-rich-quick crowd floods the market with impossible dreams.
I see it as confidence. It's the market pricing in the immense potential that lies just ahead. This is how new price ranges are established. First in the derivatives market, then in the spot market. It's a signal, Cole, a powerful one. But I know you need more than signals. You need the cold, hard data. So let's look at the king itself, Bitcoin, and see what the charts on TradingView are telling us right now.
Yes, let's. Please ground this conversation in something other than corporate marketing and options market fantasies. I have the technical analysis page pulled up. What story are the indicators telling you today?
They are telling the most beautiful story, Cole, a story of perfect, absolute neutrality on the daily chart. The overall summary is neutral. The oscillators are neutral. The moving averages are neutral. It's a perfect trifecta of calm.
You're actually celebrating this? Sonny, that's not calm, that's a flat line. The market is telling you it has absolutely zero conviction, zero energy, and zero direction. The bulls and the bears have fought each other to a complete standstill. It's a ghost town. How can you possibly spin a total lack of interest as a bullish sign?
Because you're only looking at a single frame of the movie. This daily neutrality is the pause, the deep breath before the plunge. But it's a plunge upwards. You have to zoom out to see the real picture. If you look at the 1-week chart, the moving averages are still firmly in the buy category. And if you go out to the 1-month chart, they're not just a buy, they're a strong buy.
Oh, this argument again. So we're supposed to ignore the reality of today, the neutral daily chart, and instead focus on the fading memory of a rally from a month ago? Sonny, that's called a divergence. It's a massive red flag. The long-term trend is a lagging indicator. It's the echo of a party that's already over. The short-term chart, the one showing neutral, is telling us the party has stopped. The engine has stalled.
It's not a stall, it's a strategic pit stop on a high plateau. This is the healthiest signal you could ask for. It means the powerful, long-term, strong buy trend is the real foundation. The daily neutral signal is just the market shaking out the short-term speculators and consolidating its gains. It's building a base of solid support before it uses that long-term strength to launch into the next stratosphere. It's a coiled spring, gathering energy on a launch pad of strength.
It's a bull trap, plain and simple. It's a car that has run out of gas but is still sitting on the peak of a mountain, giving the driver a false sense of security. The long-term strong buy is the mountain, but the neutral daily is the empty fuel tank. There's no new momentum to push us higher. The only force left to act on us is gravity. This isn't a launch pad, Sonny. It's the edge of a cliff.
That's all for this episode of Rekt Radio. I'll be here enjoying this period of calm accumulation, watching the smart money place their bets on the future, and waiting for the long-term trend to prove itself once again. Stay bullish.
And I'll be here with a parachute. When a company's strategy is hope and the market's energy is zero, it's time to be cautious, not courageous. You've been listening to Rekt Radio.